Welcome back. This is The Rebel's Edge. Pete Najarian and I are going to break down for you the top business stories of the day, a little bit of sports, and maybe examine why, indeed, somebody chose to downgrade the U.S. debt. That somebody was Moody's, folks, even though we're now cutting debt and the previous administration was adding to debt. But that didn't seem to matter then. But now, because Trump's president, apparently it really matters now. We've got the 411 on that and a lot more on today's Rebel's Edge. Bam.
We got no clapper, but we got the book. It's not an option.
And you know what, Pete? I'll open with it's not an option. It's not an option to be a credit rating agency and then totally shun your responsibility for 4 years and then decide when the new guy comes in, oh, wow, look, where'd all this debt come from? It's kind of like that cop in Casablanca when he goes, Claude Rains, when that's the actor's name anyway, when he goes, gambling in this establishment? You're winning, sir. Oh, yes, thank you very much.
Well, he's already been in office a full 2 or 3 months, John. Why not? I mean, you know, what the heck?
Yeah. All Doge has been doing is finding out waste and fraud. And meanwhile, the fact that the guys woke up over at Moody's and said, what? Anyway, he is indeed Pete Najarian, folks. I'm Jon Najarian. He's up in Minnesota. I'm down here in Puerto Rico, the continent of Puerto Rico. I don't know how we get away with calling it a continent from time to time, Pete, but I have heard it. It's a really big island, though, and it's fun. Yeah. All right, let's get into today's macro minute, Pete, and it is, of course, what Moody's did out of an exuberance that is seldom seen by ratings agencies. They decided that the ratings for our debt are worse now after a couple $100 billion have been shaved off of the debt. It's probably worse now than when Biden was dumping on trillions, Pete. So Moody's downgraded the U.S. debt. All the market indices were down, but they've been fighting their way back the whole session, Pete.
Absolutely. We were down as much as 300 points on the Dow. I mean, we looked like things were going to be a pretty rocky day. You know, you never know where it's going to go once you get the actual bell ringing and everybody getting ready. But, you know, looking from 10,000 feet, yeah, this is the macro part of the market, right? Moody's in this downgrade. And the knee jerk was to sell. I'll tell you what, at least for now, and we're a couple hours into the session, it'll be interesting to see because we're very close to being into the green. So we have definitely captured a lot of that, John, from the selling of the Moody's. But it was an obvious seller. This was something that could have been delivered at any point in time. They just happened to wait until now. So it's out there. That's what it is. And it looks like the market is digesting it very rapidly.
I'll throw out another angle on this, Pete. You remember how we had 2 quarters of negative GDP and all of a sudden everybody said, that doesn't matter. That's an old hackneyed thing. I guarantee if we ever had 1 quarter, they would call it a recession now because why not? I mean, you know, it's bizarro world. But anyway, all right, let's take a look at copper, Pete. One of those big, what do they say? We call it a Dr. Copper because it's got a PhD in finance.
Those are the guys, when they say that, by the way, I'm just going to interject. When they say that, that shows you exactly who they are. They don't know anything. But anyway, go on.
Well, copper 467 today, Pete. That's not the high on the year, but we're bouncing back up and heading towards it. But believe it or not, that's probably a good sign, Pete, that people want more copper now. What do you got?
Well, you know, we had that volatility index get all the way back into the 17s, John, a complete round trip, right? I mean, from where the volatility really started before we got into the April craziness that we had. But that being said, we jumped up, sure. We jumped up. We got almost up to 20, and then we pulled right back. And when last I looked, John, we were trading just above 18. So it gives you an idea. When I said they're digesting things about Moody's, well, I think they are digesting those things. And I think the volatility index is telling us exactly that, because that has been ramping down as we've seen the markets coming down. Wouldn't be surprised at all if we go into the green. That volatility index is going to definitely be on the 17s once again.
Yeah, I mean, it really is phenomenal, folks, that, again, a real rating agency, these are the clowns that were rating debt and CDS, collateralized debt securities and swaps, all the rest, basically in 2007, 2008, and for decades before that, and thought that, oh yeah, that's just fine. You can put a bunch of really crappy loans on the bottom as long as you've got a couple really good ones on top, and everything's just hunky-dory with that. Whoever pays these morons deserves what they're getting as far as this credit rating. They should get a new group in here, Pete, but that's just me. All right, let's talk about Archer, because we had unusual activity in it months ago, Pete. The thing turned and burned to the upside. Last week, it was up 50%. This company, folks, it's electric vertical takeoff machines, you know, whether you want to call them robo-taxis or, you know, air taxis, all that kind of stuff. They just got a bunch of great news last week, and Cantor and a bunch of folks upgraded them. But you know what, Pete? This week, they're down 11% to start off the week. And that's probably because the stock damn near doubled in the past week.
Yeah, it's had an absolutely incredible run to the upside, John. I mean, as you were just pointing out, I mean, it really is incredible. You look at the volume that's trading in there. First 90 minutes, 27 million shares were trading. So that was something that was pretty big as well. I take a look at the earnings. The earnings still are negative, but the earnings are getting better. And I'm looking at that, John. I think that's a good thing. The same thing as far as the money that's being lost. It's about $93 million as opposed to $116 million a year ago. So things are starting to look up. They've got their partnerships. They've got United Airlines. They've got Palantir. I think that there's a lot of good things about what's going on underneath Archer. It's going to be crazy, but I'll tell you, it's pulled back a little bit, as you were talking about. But let's be honest, this has been a stock that's absolutely ripped over a very, short period of time, up 60%. So yeah, you're going to pull back a little bit here and there, but I think this thing's got the trajectory to continue to go higher.
Well, in November, Pete, it was a $3 stock.
Right.
Today, after falling 12%, it's $11.65. Yep. So yeah, there has been a lot of good news that's been priced into this thing. Maybe time for it to take a breather.
Yep.
All right, TXN like Nashville, M like Mary. TXNM Energy, they rally double digits, Pete, after Blackstone Infrastructure, symbol BX, decides, you know what? We want these guys, and we're going to take them out at 61 bucks a share, and the stock, boom, to the upside.
You know, it's been an amazing thing and marvel to look at what's going on with private equity and where they've gone and where they've been absolutely getting bigger and bigger and bigger. You talk about data centers, we talk about utilities, we talk about all those things all the time. But the investors that are really profiting from that, John, have been the Blackstones of the world. And it's an amazing thing how quickly they've been able to jump in there. The cash that they've got on hand has been absolutely extraordinary. 4 times normal volume in the first 90 minutes. So I think that says a lot. And a 23% premium is what they're paying for it. It's $61.25 for the stock. This is a really interesting thing that where we're seeing more and more of this. The PE firms are targeting these kind of folks, the data centers, of course. And I think this isn't the end of it. We're going to see more and more of that. And oh, by the way, as we see a lot of that, John, I think it also comes back to what's going on in the financials world. I'll tell you what, there is so much going on in terms of takeovers and buyouts and all the rest of it. And the IPO market, yeah, it's slower, but it's getting a little bit more momentum along the way as well. I think there's a lot to be said for a lot of these PE firms and where they are right now. We know exactly where they want to invest because they're showing it right now in front of us.
Right. And why not, especially in these energy stocks like this one, Pete, Sable Offshore, which, by the way, it's not an option. if you guys haven't already got your free copy of It's Not an Option, well, go get one now. Just go to itsnotanoption.com because, yeah, we once again had unusual option activity in here. They basically announced that they've restarted their oil production in Santa Ynez. And for that reason, the stock getting a big lift today. And that unusual activity, Pete, paying off for us bigly, as the president might like to say.
Yeah, up 18%, that's nothing to sneeze at, John. There's a big short position in here as well. I think they're starting to feel a little bit of that pain. By the way, the stock did hit 52-week highs today of 35, so I don't have to guess if they have pain. I know that they've got pain. There's storage involved here. There's also the hydro testing that they go through and all the rest of it, and they're moving quite well right along. As they're on target. June, July is when they think they're going to get that up, and the reopening of May of 2015 is when they shut her down. So basically, let's call it, it's 10 years, and here they go. They're ready to rock and roll, John.
Yep. And again, folks, you get a leveraged bet with options. You define your entry with options. When we saw this, the stock was below 20. Yeah, the stock was up, like Pete said, strong today and went from 30 to 35 roughly. But we had it when it was below 20 with that unusual activity. So even though those options have expired now, Pete, they only expired on Friday last week. Yeah. So you got the ride from 20 to 30, yeah. And then you missed the last $5. All right, well, that's the way it goes. Yeah. All right, take a look at United Health. This is located right up there where Pete lives part of the year, up there in Minnesota. And we talked about some of the issues that they face. We don't need to just tar them with all of that bad stuff. But the new CEO, who had been with the company for a long time, put his money where his mouth is, Pete. Stephen Helmsley bought $25 million worth of shares in UNH. And that's kind of drawing a line in the sand. He says the stock is way too cheap and I'm in. What do you think, Pete? Would you be in here?
Well, yeah, I think I finally would, John. I mean, we talked about this one and stay away. But once you start to see the insiders saying, you know what, this is BS. We're going to show how much BS this is. We're going to throw out some money here. Seeing the CEO put down $25 million, the CFO put down $5 million, other executives put down money. I mean, there is this criminal investigation that they were talking about. And obviously, that was something that had everybody concerned. That's why you wanted to not be a part of this. But if the insiders are signaling to us that, you know what, it's clear, this is not going to be a problem, boy, I certainly have to take at least another look at it, John, because this is a stock that now it's up about $50 from its ultimate low that it hit during this whole run to the downside. I think from a closing low factor, I think it's still up $25, something like that. So the stock has made a heck of a move based upon what they're seeing the insiders do. And unless these insiders are absolutely nuts, it seems to me that they're saying, hey, look, they don't have anything on us. And if that's the case, it probably is too cheap. So it's a pretty interesting one to watch. This is one, if I was going to be involved, I'd probably put on a spread or something like that. But I'm not in there right now.
All right. Well, Pete, I know your favorite segment is right here upon us now. And we've got a very humorous way to lead in with sports today, folks, because these are the top 5 quarterbacks for the Pittsburgh Steelers. Let this guy tell us about it.
Here are my top 5 potential quarterbacks to start for the Steelers this season. Number 5, I have Aaron Rodgers. There's a rumor that he now belongs to Nevillewood Country Club in the suburbs of Pittsburgh.
He belongs to a country club out there now, Pete.
We cannot forget the game that he threw 4 touchdowns for the Polk High Panthers in the city championship game. At number 3, I have Paul Crewe. If Pete Rose can now get inducted into the Baseball Hall of Fame,
he should have done the Burt Reynolds Paul Crewe, though.
If you can beat a bunch of prison guards, I think you can beat the Baltimore Ravens. At number 2, I have Uncle Rico. It's never been confirmed, but Uncle Rico did say he could throw a football over those mountains. And let's not forget that when Napoleon was playing patty cake with Pedro, he was out there making $120. But you cannot deny that Shane Falco should be the number 1 prospect for the next Steelers quarterback.
Alias
may not be a
Keanu
Reeves.
Reeves.
That is a great list. That is a great list.
Chicks dig scars and glory.
And including
lasts
Aaron Rodgers.
forever.
None of them have signed with the Steelers.
No.
Well, that is pretty good, John. That's classic. I like that lead in. That might be one of the best of all time. I thought I'd throw this out to you. So
All right.
obviously late last week, Brock Purdy signs a contract. How big a contract? A lot of people were saying it'd be crazy to give him anything more than $30 million, right? Well, $265 million over 5 years. He's getting more than $300 million or $30 million a year. He's getting $55 million, $50 million a year, whatever. I mean, and the way they move that money around and everything, but we'll just call it, he's right up there in the top 10. Now, the question a lot of people would ask would be, well, come on, Pete. Why is Brock Purdy? Is he really worth that? Is he really worth that? And my answer is this. Since taking over as the quarterback of the Niners in week 14 of the 2022 season, John, here's what his numbers look like. And then I think we can answer that question. His yards per attempt is ranked number 1 in all the NFL. His passing yards ranked number 4 in the NFL. His touchdown passing is ranked number 7. The total QBR is number 4. So anybody who wants to continually tell me that this guy is not worthy of what he got. Oh, and by the way, he had a bit of a struggle last year. 2024 wasn't great for Brock. Well, let's see. He didn't have McCaffrey for a chunk of the season. He didn't have Ayuk for a chunk of the season. His offensive tackle, left tackle, most important part of the offensive line, Williams, he was hurt. Kittle was hurt significantly here and there. And then, of course, you got Deebo Samuel. Now, you've got all those guys gone, and yet you still put a team together that has, some pretty nice wins, got themselves into position, all the rest of it. I would say Brock Purdy is definitely worth the money that they paid him. But a lot of people will still argue it. What do you think about this, John? I mean, he's Mr. Irrelevant, right? That's who he is.
Well, let me throw out some of the monetary figures here, Pete, because they're extraordinary. $265 million.
That
Wow.
is, yeah.
Over 5 years.
It's a number.
181 million guaranteed.
Mm-hmm.
So let's put up Jared Goff against it. Cal, quarterback. Pete and I knew this guy. Contract, he got a 4-year, $212 million deal. He's basically averaging, when you divide that out, the same as Brock Purdy. Then you take a look at Tua, a guy that you don't know if he's going to even be able to play much longer, Pete.
Oh.
And he has $93 million fully guaranteed. And this could be his last year. I hope not. He's an exciting quarterback. I love to watch him, but he's had so many concussions that, being realistic, not being nihilistic, Pete, I'd say this is a little bit of a risk with this guy. Then you've got Jordan Love, the Packers. So after he had the good year, I'll say, not great, good year, he got 4 years, $220 million. He's making more than Purdy, and he hasn't brought him to a Super Bowl. Purdy has. Joe Burrow, I'll just end with this one, Pete. 5 years, $275 million, $55 million, and that is one of the best quarterbacks. If he didn't have the injuries, Pete, he would be, hands down, the best quarterback in pro football, in my opinion.
Yep. That's great. Love it. I think you're right. And you know what? I don't understand if you want to use the word hate, I don't know if it's hate or not, but I don't understand the people that are just so against the fact that Purdy's worth that or not. I mean, I think those numbers alone kind of show it all. So I don't know where the arguments can still come from. All right. Well, now we got to talk about Bill Belichick, John. I think that there's a lot of things about Bill Belichick that are hitting the news, and most of them point towards, his girlfriend, who is, let's be honest, she's very young relative to where he is, but it all focuses on his girlfriend. That's not my focus. My focus is on this. Is he focused as a coach? Well, what was the first hire that he made? He hired a general manager. He didn't go out and get a D coordinator or offense coordinator. He went out and got a general manager because he understands football at the NFL level. And let's be honest, the NCAA football is now at the NFL level, right? I mean, you've got free agency, you've got the portal, you've got money, you've got the NIL. So it really is professional football in a lot of ways. He hires a general manager. That's the first thing he did. He's gone into the portal, John, and absolutely ripped it up and found the guys. He's lost a lot of people to the portal. Sometimes guys just want to leave because they want to get on the field, so they're going to go somewhere else where they can. So I don't really worry about the guys that they lost. I don't worry at all. I'm more concerned about what's going on and who's coming in. Well, they're killing it inside the portal. They are getting the 2s and 3 stars and, some 4 stars here and there. They're number 9 out of 10 right now. They're number 9 in the portal in terms of the ranking of what they've been able to accomplish. So they're doing a lot of things right there as well, John. And the last thing I'll say is this. A year ago, they had an NIL that they had raised $4 million. Right now, Bill Belichick's got that number up north of $20 million. So he's got the money. They've done that. They've gone to the NIL to make sure that they could do that. They've got the donors and everything that goes into that. So they've got the money side of it. They've got the free agency side of it with the portal. I think he's going to get this North Carolina team turned around really, really rapidly. Does it happen this year? I can't say for sure this year, but they're certainly on their way, John, because I think he's making the right steps. But all people talk about every time Bill Belichick's name comes up, yeah, what about his girlfriend? What did she do now? Well, you know what? Maybe focus on football, right?
Yeah, maybe. Pete, this is a guy that doesn't get distracted. Right. Now, some people are distracted by his girlfriend. Good for them. Bill Belichick doesn't seem to be distracted. Like you said, signed a lot of great coaches. His son and a couple other folks that have been with him a long time went there with him. And I would point out, Pete, he got divorced from his wife, Debbie, in 2006. Okay. And again, does that really matter? Well, let's just say that probably takes a lot of your attention. Not all of it, but a lot of your attention when you're going through a divorce, which luckily neither Pete nor I have gone through. But I think Mr. Belichick was able to put that behind him. He still won 3 more Super Bowls, Pete. He won 2014, 16, and 18. Got divorced in 2006. In other words, with all those rings, did the focus on football fade because all of a sudden he's a single guy and maybe he can, go out and enjoy himself a little bit more during the off season and or during the season. Didn't seem to bother him then. I don't know why it would bother him now, Pete. So anybody betting against this guy, those people, like you said, Pete, that are saying he might not even be there for the first game. He's so distracted with Jordan. Not really. I don't think so. Does he really like her? Seems to really like her, but I don't think he's going to be that distracted, Pete.
I don't think so either. This has been something that's been going on for a while now anyway. And so it's interesting and it's great fodder, right? Everybody likes to talk about it because of his age and her age and all the rest of it. But the reality is he's a heck of a football coach. He knows a heck of a lot about what he's doing, and how he's put the pieces together shows me, John, that he is focused. I don't know if it's laser focused, but it's maybe pretty close to laser focused for sure. He's just that kind of a guy. That's the kind of coach that he is. And I think it's going to be a really interesting first season. The second season, that's the one I'm looking forward to, because once he gets his feet wet and everything else, John, I think it could get really, really interesting. So the first year is going to be tougher, but I think if he goes 2, 3, 4 years down in North Carolina, he's going to probably rattle some cages down there for sure, I think, and maybe get himself positioned into the playoff. Who knows?
Well, keep in mind, folks, that Pete knows a thing or two about this, because he was there when his team went, 1-10, Pete?
Yeah.
Was that what it was?
Yes.
Something like that? And then Lou Holtz came in there and turned the whole thing around.
Yep.
So North Carolina wasn't 1-10.
No.
So they're not a horrible football team. They're a pretty good football team, like Pete said, that the primary focus at the school has been basketball, but they've been putting out some pretty high round draft picks in the last few years. If he can keep some of those and attract more of them because of his bona fides being a big Super Bowl wearing dude, I think that bodes well for North Carolina. All right, Pete, thanks as always. Remember, folks, it's not an option to just trade stocks anymore. You should be trading options. We can show you how. Check out itsnotanoption.com for a free book, and we'll be back tomorrow. What time, Pete, are we back tomorrow? I forget.
1 p.m. Eastern.
1 p.m. Eastern time. See you then.